Can you guys hear me? No. Okay.
You got your choice.
How about now? No.
Best.
How about now? Yes, I think so. Yeah. Thank you very much, and thank you for the invitation, and congratulations on your 40th very successful year. I'm very happy to be here, and today I'll be talking about mainly about Asia Innovators strategy, why I believe that this is the right way to approach Asia. I will talk about the strategy, why Asia, current positioning, and a little bit about the outlook. And I'm sure you're going to have a lot of questions about China, so I will try to address that during the Q&A session. Matthews, we've been focusing on Asia and emerging markets for the past 30 years, and that's all we've been doing in the last 30 years. Very much Asia focused. In the past few years, we've been really expanding into other emerging markets as well. We have boots on the ground. We have an office in Shanghai, Hong Kong, and near here in New Jersey as well. I'll start with the strategy. This is a Asia-focused growth strategy, but a lot of our clients are use this strategy as part of their EM strategy. We do believe that innovation is the key sustainable driver behind creating sustainable moat, but also retaining the moat as well. I've been with Matthews for about 23 years now. I didn't get any fancy pin, but hopefully they will get the idea, and maybe I'll get one too. But meeting with the management on the ground has been a key part of our investment process, bottom up, for the past 20 years. And whenever we dig deeper into what's really creating that sustainable advantages, it all comes down to innovation. That's why we like to focus on innovation. We also do believe in structural growth ideas. There are two big trends that we are seeing in Asia. Number one, disposable income, and number two, emerging middle class. And we are all about finding that structural growth opportunities emerging from the two big mega trends that we are seeing on the ground. We also believe in more concentrated portfolio. We aim to hold somewhere between 30 to 50 companies in Asia. We currently hold more close to 50 companies because we are seeing so many more opportunities, mainly because of the valuation that we are seeing on the ground. We also believe that benchmarks are not much relevant in emerging markets. Benchmarks tracking Asian markets, they tend to be more backward looking. And we do believe that our portfolio represents the future of Asia. Now, how do we define innovation? Most people associate innovation with breakthrough products or services. We really have broadened that concept to include companies that are building great businesses in Asia, mainly. We also recognize that innovations comes in many different shapes and forms. Sometimes it's a breakthrough technology. So companies like Alibaba or Didi, they're completely changing the way we shop or use transportation. Companies like Amazon or Uber here. On the other hand, companies like Samsung Electronics or TSMC, they're making those incremental innovations every year, and they're still very successful at it. We also look for innovations across all corporate structure. We don't only look for products or services, but we also look for innovations in terms of how they manage their customer relationship, how they manage their supply chain. They're about their marketing strategy and branding strategy as well. Why do we believe that focusing on innovative companies is the right way to go? I believe that the structural growth driver behind what's been driving the growth in Asia is changing. In the past 20 years, it's been very simple. The main driver have been very simple: labor, capital inputs. However, as income in the region goes beyond $10,000 and more, I believe that the structural growth drivers are changing to more services-oriented industries: automation, healthcare, entertainment. Basically industries that are more services driven. Another reason to look for innovative companies is the tremendous worth and the size of the market in Asia today. For example, if you look at Korean or Japanese cosmetics products. I'm not sure how many of you are familiar with cosmetics products. But Japanese and Korean cosmetics companies have been creating very innovative products for the past 20 years. But until about 5-10 years ago, the overall market value they created were very tiny. They had a market cap of about $1 to $2 billion, even though they were very innovative companies, simply because they didn't just have a market to sell their product into. They were creating products that are very well known to, using the ingredients that are very well known to Asian consumers. But at that time, a lot of the consumers just couldn't afford to buy those innovative products because they tend to be very expensive. They go anywhere between $50 to sometimes over $200. Fast forward to today, these companies have become $10 to $20 billion companies, mainly because they found one of the biggest consumer market as their home addressable market today. With the emergence of Chinese middle class, a lot of people who couldn't afford to buy those products 10 years ago, now they're able to, mainly because their income, disposable income, is just that much bigger. And we believe that this is just a beginning. And if you look at the size of the market today, they're the biggest. But by 2030, they're expected to be bigger than the US and the European market combined. Think about that. That's creating a lot of growth opportunities for innovative companies that are creating products for the Asian consumers. So I believe that bigger opportunities going forward will be companies that are making products for the consumers in Asia, making products that Asian consumers want to buy. And companies in Asia, they're also recognizing that as well. So if you're innovative, and if you're coming out with innovative products for the Asian markets, you can be very profitable. You can generate bigger profit, bigger revenue, and then that translates into even more bigger R&D. So today, Asian companies are the biggest spender when it comes to R&D, outspending both US and European companies. Also, human resources. Today, Asia produces the largest number of PhDs, students, and that's not including Asian students that are studying in the US or Europe who might return back to their native countries and join the workforce there. And if you also look at patent application, today Asian companies have the biggest share when it comes to patents. Also, if you look at unicorns, prior to pandemic, a lot has changed since the pandemic, but prior to pandemic, if you look at about 50% of all global unicorns, private companies that are valued at about $1 billion or more, they're all based in Asia today. And 5 out of top 10, they're based in Asia today. And this is such an amazing achievement for Asian companies where this concept of startup was very foreign just 10, 15 years ago. Now, a lot of questions that I get a lot from my clients is, where do we stand in terms of this innovation-driven growth era? And I believe that we are still in the very early innings when it comes to innovation-driven growth era. So if you look at innovation, what do we need for innovations to take place? We have to have 3 things. First, you have to have a very large addressable market, as we've been seeing with the cosmetics example. Number 2, you have to have a very strong human resources, which Asia now has. Number 3, you have to have a very vibrant capital markets. You have to have a very big venture capitalist to fund and support these companies. And you have to have a very big equity market to give access to capital. Now Asia has all 3. And last time we saw this happen was the US, right here, back in the 1970s and early 80s. And during that time, many great innovative companies were born during that time to mainly serve the needs of the US market. So companies like Microsoft, Nike, Genentech, they were all born around that time. They didn't start as a global company. They were mainly there to serve the needs of the US market, and then they grew to be global giants. we believe that that's where Asia is today. And there's no guarantee that Asia will replicate what happened in the US for the past 30 years exactly. But given where Asia stands today and given all the resources they have, I think Asia has a very strong chance that what we've seen in the last 30 years could be replicated in Asia for the next 10, 20 years to come. And this is the current exposure that innovators have. We really try to focus on companies that has a very structured tailwind behind them. We do believe that when you mix structural tailwind with great management, you get a great result, and that minimizes the mistakes that we make as well. Current environment, I know that there has been a lot of political tension between US and China, and I was just having a chat with my colleague about that. I'm Korean. I was born in Korea, and I was raised in Korea, and I immigrated to the US when I was 15. And I'm a naturalized US citizen, so go USA. But as a Korean, we don't want China and the US to get divorced. We need both of them. You cannot really choose one or the other. So I'm really hoping that this political environment will improve. But at the same time, I do believe that this political tension is here to stay. And we are making our portfolio according to that belief that this tension will probably going to last a very long time. But at the same time, I don't believe in decoupling. I think that both economies are mutually could benefit a lot, as we've been seeing with Apple's case, for example. They have created tremendous value for shareholders in the US. And without China, without their supply chain, a lot of their products is already very expensive, but it could be much more expensive in the future if you don't have that cheap manufacturing base access to Asia and mainly in China. So I do believe that decoupling is very unlikely, although we're going to see a lot of bad headlines and this macro negative trends is likely to continue. Also, the valuation. If you look at especially the last 5 years, even though the fundamentals of Asian companies have been very strong, the valuation, because of these political tensions, have basically the opposite way. So if you look at US tech companies versus Asia 5 years ago, Asian companies were actually trading at a premium, about 10 to 15% premium. Now they're trading at about 20 to 30% discount to comparable companies in the US. At the same time, if you look at for the next 5 years, you're likely to get higher growth and better EPS growth out of Asia, out of emerging markets. And now you can get to buy them about 20 to 30% cheaper. So that leads into outlook. I'm cautiously optimistic, mainly because of the valuation and mainly because of the positive attributes that we've found in Asia so far. And you still get a lot of growth out of Asia. And if you look at developed markets versus emerging markets, you definitely do get a higher EPS and revenue growth, likely for the next 5 to 10 years. And you get to buy them at a much more attractive valuation. And if you look at China, for example, they're trading at a historically low valuation that I haven't seen personally in the last 20 years. So you get to buy them at a very big discount. But at the same time, I think we have to recognize that a lot has happened in China in the last 2 years. So you have to apply some sort of a discount because of the regulatory environment has become very uncertain. The Chinese government has been very poor when it comes to communicating with the investor base when they want to come up with a new regulatory framework. So you have to apply some discount when it comes to Chinese companies, but at the current valuation, even considering that discount, and you get to buy a lot of companies at a very deep discount in Asia today. So I'll stop there and I'll hand it over to another presentation. Thank you.